Sports card and Pokemon dads. There's a triple tax benefit for paying your children out of your business. First, pay less taxes for you. Second, that money is tax-free to your kids. And third, that money can grow tax-free for the rest of their life. Let me show you how that works. My name is Johnny Petrucco, an IRS enrolled agent, sports card tax pro, and I started working in the family sports card business at 7 years old. So my dad eventually 1 million sports cards in our house, and I spent many hours with my Beckett price guide, going through each card, pricing them out, listing on eBay, packing shipments, and all of the great fun things about having a sports card business. Now, I don't remember getting paid when I was 7, 8, 9 years old. I do remember, and my dad's got to clarify this, but I know in high school I did get paid an hourly rate. But what if I got paid when I was younger and my payment wasn't just cards for my personal collection or allowance, but I did some genuine work, and that payment would have been a tax deduction to my dad's business, tax-free for me if it's under the standard deduction, which I'll explain all of this in detail in a moment. And if that would have been stocked away into a Roth IRA, there's other investment vehicles, but choosing that, tax-free growth, and now, 25 years later. That would have been quite an investment. So will this work for you? Well, you do need to have a business. It could be a side business. You could have a full-time W-2 job and you have this sports card business filed as a Schedule C, and you and your son, love doing this together. There is a way you can arrange genuine work for your children. Or of course, if you have a shop or a breaking business, whatever the case is. Now let's walk through qualifications if this is going to work for you. First thing is, this works for children that are under 18 years old. And the primary benefit of paying a child as an employee that's, say, 16 is the avoidance of payroll tax. Okay, normally an employee will have to take out 7.65% Social Security and Medicare taxes, and the employer also matches that, so 15.3%. Now you're paid as an employee because an employee only takes out the 7.65%. If you pay them as a contractor, then they're responsible for the full 15.3%. Nevertheless, in either case, if they're under 18 years old and the business that's paying them is a parent, there's a federal law that exempts payroll tax on both sides of the coin. So right away, 15%, if you pay them $10,000, that's $1,500 savings. Then that's a direct deduction for you. Plus, if it's under the standard deduction in 2025, which is $15,750, they have no federal taxable income. And then you can take up to $7,000 and stock it into a Roth IRA because you have earned income now. And that's a requirement for contributing to an IRA. Now, a number of accountants obviously know about this, but number of business owners have discovered I can pay my kids and get nice tax deductions. Of course, the child needs to be doing reasonable work and to pay a reasonable wage. And so that doesn't necessarily mean they get paid minimum wage, but it's something reasonable that you can back up. This is also, red flag is if the standard deduction is $15,750 and you just write a check for your child for that amount, without doing much work, that's a little fishy. You'll need to have a good tax advisor that can help you have proper documentation. There's not too much you need to do, but at the end of the year, a W-2 should be filed and there might be some administrative things to set up. And then just in case you have some kind of backing and, pay them as much as you can, right? This is staying in the family. And so you will need someone, and I'm available. Please reach out to me for a call. Would be happy to hear your situation, see how I can help you. But let's say now you have your kid going to the shows with you to sell, listing cards on eBay, researching, shipping. It's great business to bring your family involved. I loved being in a family business growing up. You learn so much, right? As a kid, you get some skills. It's a really cool experience. There's so many benefits overall. I would encourage you though to report the income that's being spent to your child and not just allowance or cash here and there, but if you track it properly, it could be a great benefit. If you are an S corporation, you're gonna have to do this a little differently. And so disregarded entities, which are sole proprietors, single member LLCs, it's pretty straightforward. You just pay your child by transferring funds out of your bank account into their bank account or into a bank account that you as a custodian watch over. You can transfer Zelle or a check or just give money directly to your child, but keep it tracked. However, if you are an S corporation, you have great tax benefits. Here's a video explaining, S corporation benefits. But if you pay your child directly from the S corp, then you cannot avoid payroll taxes. There's a need to create another entity called a family management company, and that's a whole little bit of a logistical thing to set up, but that is the workaround so that you can pay your child and avoid payroll tax and have the same benefits that you would as a disregarded entity. Other really important things to keep in mind is, federally speaking, there's not quite an age requirement. There's reasonableness. So I have an almost 2-year-old and almost 4-year-old right now. I gave my son, my almost 2-year-old, cards and he slobbered and bit through the cards, bent them up. They were just some base cards. Just wanted to see what he would do with it. But obviously I can't pay him. That almost a 4-year-old, she can start to do things pretty soon, I would say. But there's a level of reasonableness to it and tracking and so forth. It would be a good idea to have this confirmed with an accountant and get you set up on a proper way so that you are foolproof and you don't have anything to worry about. But a caveat, unfortunately, at the state level, it's a little strange. Even though federally there is this law that allows the avoidance of payroll tax, there are also state labor laws, and every single state is different. And so some states don't allow you to hire if they are under 14 years old, or if they're under 16, if they're 14 and 15, you need approval from your school district board. So there is some other caveats. You just want to make sure you're following the state law as well. But nevertheless, this is an incredible strategy. I talked about the triple tax benefit. Number one, business deduction. It's a payroll expense. Number two, if they receive, say, $12,000 for the year in reasonable, helping out in the business, that's $1,000 a month. That will be federal tax-free to them because the standard deduction, you would file that return and the tax owed would be zero. $15,750 is the standard for 2025. There are some states, though, that have a lower standard deduction, but it should still be pennies. And then the third benefit, you can take earned income, which is up to $7,000, and stock that away in a Roth IRA. There's a bunch of other things. I'm not an investment advisor. I've learned, about these things from the tax side, but there are a number of things that you can get creative with and help them save for the future. And so I think that's a decent overview of paying your children and the incredible benefit that it has. But I did leave out some details, so feel free to leave a comment or reach out to me if you have any questions. Happy to help at Sports Card Tax Guy. I'm helping my clients trade their IRS stress for financial success. I'll talk to you soon.